Hello everybody, welcome to this week's live stream. We'll make a start. As usual, if you've not attended these before, we look at usual big markets, indices, gold, oil, FX, bit of crypto maybe, and then I go into the questions and have a look at anything that you want looking at. I need lifting up this afternoon after watching that dreadful Wales performance. Well done Iran though. Well-deserved win. Let's get the housekeeping out of the way. Let's do the risk warning first. This presentation is only for educational purposes. This presentation does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Okay, so before we get into looking at the markets, a quick look ahead to next week. Busy day on Wednesday next week. So Wednesday, there's Australian inflation, EU inflation, and US GDP, the US economy, growth or not figure. So Wednesday's a big day next week. Clearly, we know inflation continues to be the major concern for markets, but maybe we're past peak inflation. I've talked about that a bit in recent weeks. I do wonder if we haven't gone past the worst. Are we near the top, short-term top in inflation? Then on Friday, US non-farm payrolls. So in a week's time, it's normally a big one. US unemployment numbers. So as usual, we'll do the live stream this time next week. It will be an hour after those payrolls have come out, so it will make for interesting reading. Just one thing while I remember, I'm thinking about doing 2 live streams a week. So I'm going to start next week. Also, I'm going to try it out and see how popular it is. So I'm going to do one Wednesday at 12:30 my time, UK time. There's not much point doing one on Monday because I do the Friday one. So next week I'm going to do Wednesday 12:30 and Friday 2:30 as normal. So just to make sure you don't miss out, if you're not subscribed, if you click on subscribe to the channel and click on the notification button, you'll get a message when it goes live. So I'll try it through December. If it's not popular, then I'll can it and just do the Friday ones. But I thought I'd do a couple a week. But that's it. That's what's happening next week. So lots to watch again next week. Wednesday could be a big one. A quick word from our sponsors again, which is me, of course. I run this training course. I've been running it for 1.5 years. I recently added another bit to the course, but there's a medium-term trading course that's looking at trading over weeks and months. There's 11 video lessons on that. There's a shorter-term trading course. I need to update this. It's hours and days, and occasionally a week. 7 video lessons on that. And as part of the course, there are 4 live webinars. So for those of you who are on the course, the next live webinar for course attendees will be next Thursday night, and I'll send the details through this weekend. I wasn't around last week, and I put that video up that looked at the P&L for the course as I'd been trading it over the last month. If you want to find out more about the profit and loss and how it all works, watch last week's video from last Friday. But here's an update on the P&L so far. I was away for most of this week. I came back on Wednesday. Closed profits following the course approach with a £4,000 account. Closed profits over the last 30 days, 648 quid. Open profits at the moment, the 2 trades I've got running at the moment, I did these yesterday. I'll talk about these when we have a look at the markets, but I'm long sterling yen, and I'm short gold from yesterday, so they're up about 150 quid. So overall, on a £4,000 account, it's made about 800 quid so far over the last 30 days. You can trade it with more money, you can trade it with less money. I chose £4,000 as a fairly arbitrary example, but that is a cracking return, to be honest, 20% return over a month. Obviously, past performance is no guarantee to the future, but as I said last week in the video I'm very open about how hard trading is, the reality of trading, and I think it's important to be open about the numbers. So there's the numbers. Trading the course approach over the last 30 days. I only updated the short-term course about 2 weeks ago. So we'll talk more, for those of you on the course, we'll talk more about those numbers on Thursday night and what it all means. So there you go. To find out more, go to my website. Website link is in the description of this video, jonesthemarkets.com. Any questions about anything, drop me an email, dj@davidjonestrading.com. Okay, there you go. Let's have a look at the markets. So the big news this week was was it the Fed decision or it was the press conference anyway. Like I said, I was away till Wednesday, so I've not been paying much attention. But the Fed, the US central bank, saying it was that perhaps interest rate rises would be a bit slower than they first thought. And again, this does tie in with, they've been quite aggressive, particularly the Fed, in raising rates to combat inflation. I wonder if we're past the peak. I don't think we're going to see inflation go crashing down, but are we past the peak? And this week they said that perhaps they'd be a bit slower rate rises going forward. Anyway, so the market as usual to watch for me is the dollar index. So we'll start off with the dollar index, then we'll look at stock market indices. Again, the speculation for me at the moment is over the last month or so, couple of months, have we seen a short-term top for the dollar index? We'd had this great trend that's been in place for a long time. And if you've seen any of the other live streams I've done, I'm a big fan. I've been a big fan of this trend, buying into dollar weakness all the way up. Looking next week, I would quite fancy buying the dollar next week. I think that could be an interesting trade next week. Absolutely, a lot of momentum has gone out of this market since that multi-year high in late September. I wonder if 104.60 is going to be a bit of a line in the sand. We saw the market come down to it in middle of November, traded as low as 105.30. Last week, or yesterday, came down to 105.60. So there's quite a bit of support emerging at 105. So whilst I don't think we're going to see 114 anytime soon for the dollar index, I wonder if we're going to get a bit of a blip higher over the next couple of weeks. Let's see. I think if we start losing these levels, the risk is a much deeper sell-off, perhaps to May. Be 6 months low, that would be back towards 102. But for me, 104.60, 105 is an interesting one to watch, I think, next week for the US dollar. And like I say, I'd quite fancy a buy, assuming it finishes okay today and doesn't plunge this afternoon. I wonder if it's a little buying opportunity, but it definitely looks like it's changed from a quite strong trending market into something of a rangy market at best. Let's see what happens. Let's have a look at stock markets. So stock markets, here's the S&P. Not much has changed. The last time we did a live stream was a couple of weeks ago. So it was on the 11th of November. So it was back here. So the market, if I zoom it in, so it was back here. So we've had a lot of chop over the last couple of weeks. Not much progress. It's interesting though, I think, because I would make the argument the trend is still down in the S&P, and it's been down all this year. We're still within that trend. These old levels, 4100 to 4155-ish, I think are important. So for me, if I had to do a trade on the S&P, I would be going short up here. And again, if it ends today around about here, if it doesn't take out yesterday's high was 40.43, I'd be tempted to go short. I'd need a wide stop just to keep me out of the noise. But I wonder, are we going to see this market perhaps under a bit of pressure next week? Let's see what happens. But for me, that big trend is down. So, it's been a fairly boring couple of weeks since we last looked at this. That big trend hasn't changed. Let's see what happens. Let's have a look at the Russell though. I need to add this to my watch list because that has been an interesting market, the Russell 2000. Because that did look like it was turning around, and I think the argument for that is still valid. We had because it had held above the June lows. It has broken some big levels in this rally into August. It came back, it retested, and blah blah blah. This is where we are. So I think for me, if I wanted to be a buyer of a stock index, the Russell looks better to me than the S&P at the moment. But, it's been a fairly uneventful couple of weeks all round. Let's take a look at the NASDAQ. Nasdaq, look at that again. Saying it's just been dull, isn't it? Since the last live stream, which was here, we've had some volatility, absolutely some volatility, but no real change. So again, I would just be wondering now: is this rally in the big indices that's been going since roughly the 13th of October? So we're about 6 weeks into it. Is it starting to roll over? So for me, I would still favour selling short on the Nasdaq, and the big trend is still down. So interesting. Yeah, I think an aggressive trade would be go short now with a stop above that high, the 15th of November high, which was 12,090. So let's say 12,150 for a stop. It's still a wide stop. It's a 400 point stop, but it's a market that just today has moved 150 points just today. So for me, if I'm trying to catch the big move, I'd want to have a wider stop. But nothing's changed in the last couple of weeks for me in these markets. DAX. This. I think I said last time around. Has this thing turned the corner? And again, we've not seen a massive amount of progress, but it has continued to push higher. Yesterday it hit the DAX. Hit its best levels since whenever that was, June. So we're at almost a 6-month high on the DAX, 5.5 month plus high on the DAX. I think that's interesting. Personally, I'd rather buy a dip. It's really overbought. For those of you who follow RSIs, it's really overbought on the RSI. It's the most overbought the thing has been actually this year. I've got to go back a long time. Got to go back 18 months. See the DAX this overbought. So for me, I'd rather buy a pullback. If we did see US markets weaken over the next few days, that would drag down European markets, you would think, as well. So for me, I'd rather buy a dip on the DAX, but absolutely has broken out of its downtrend during this month, during November, broken some big levels on the upside, and here we are, 14,500 on the DAX. So yeah, it looks interesting, I think. That's perhaps, for me, the more interesting market to watch next week. FTSE, which, as I say, I never look at the FTSE. FTSE it's had a good run. We're still in this big sideways range that we've been in now for at least 12 months. We're getting near the top of the range. So again, if we saw some weakness in US stocks, you'd expect that to put some pressure on the FTSE. So for me, I'd be leaning towards the FTSE, maybe starting to roll over as well. But like I say, when I look at this, I never trade the FTSE. But that's what I'd be looking at, because we're back up, near the tops from 7.5 through to about 7.7 on the FTSE. The market's 74.70 at the moment. So same old for the FTSE. And the Japanese 225 CFD. A bit like the FTSE, really. I mean, it's still pushing higher. I'd rather buy a dip. I wouldn't want to buy it here, personally, because we're running into, again, we're getting near some old problem areas for the FTSE, for the Nikkei, 28,750 to 29,250. So for me, nothing much there, really, for me. So for me, the markets to watch next week, first of all, the big stuff, the S&P, is it going to start to roll over? Let's see what happens. And if it does, the DAX does look like it's broken out of its downtrend over the last month or so. If there's a dip, it could be a good buying opportunity, and the rest of them, I got no real opinion on. So let's see what happens with those. Let's take a look at gold and silver. I said I was short gold. I went short gold yesterday, based on the hourlies. Actually, I'll show you the reason I did the trade. So I went short about 1756 yesterday, and really because the trend had been down for a bit, for a week. And it had a blip higher, and I just wondered, is that a bit of a false blip higher? So I went short yesterday. It's about $6 in profit, nothing too exciting. That's the hourly chart. Let's go back to the daily chart. Looking at the daily chart, I think it's a different story. I think we've seen this really good run. Again, when did we last look at it? So the 11th. So on this day here, when we last looked at gold. Looking at the strength we've seen. And the fact we've broken some big levels on the upside for gold, I would be, on the medium-term chart, a buyer of a dip. So I'd quite like quite a big dip, but I would be a buyer of a dip from a medium-term trade point of view. So I do wonder, on the daily charts, are we seeing the price of gold starting to turn around? I'd rather see a bigger sell-off though towards 1700. Personally, I don't want to get sucked into maybe buying too high, because for me, again, if I was a buyer assuming this trend is turning round, I would still want my stop probably the other side of 1615, those lows. So for me, like I've mentioned in the past, it's a bit of the squiggle trade. I want to see gold do that sort of thing and then bounce and be a buyer. Whether that happens, remains to be seen. But I'd rather see a deeper sell-off from here and see what happens. But absolutely, the moves we've seen, I think, in gold during November does suggest that perhaps the worst is behind us, and we'll see this market start to push higher again, which does tie in, of course, with a weaker US dollar. If we have a weaker US dollar, we'd normally expect the price of gold to get a bit of a lift. So for now, I'm short on the shorter term approach. I'm short gold, but from a medium term point of view, if it's sold off much deeper than here, I do wonder if it's a buying opportunity. Silver, I must admit, I've not looked at this much in the last couple of weeks. I did a few trades on silver early November and October. Same sort of thing as gold, really, and it started sort of breaking and turning round a bit earlier than gold. I often say I find it a frustrating market, silver, to trade, because we get trends and they seem to fade really quickly. But again, a bit like gold, I'd be a buyer on a dip. If we got, again, a half decent dip, which is a bit subjective, but if we got a half decent dip, perhaps down to 20, I'd like to be a buyer. If we take a look on the hourly charts, what does it look like on the hourlies? Hold on a second. It's not really gone anywhere, has it? I suppose, at a more aggressive trade, clearly $20.40 has been good support. So if we got a sell off below 21 next week, it could be an interesting short-term trade. I'm a bit on the fence with it at the moment, silver, to be honest. So yeah, so nothing for me. But a deeper sell-off, and it starts to look, I think, like an interesting trade. Let's talk about oil. I thought oil was interesting. I would be a buyer of oil, actually, here. I think, like I've said before, I think given what's been going on economically, I don't think we're going to see oil threatening $120 a barrel anytime soon. The market has sold off from June into that low in September. And what's interesting is that pretty much over the last week, it's held that low. If we pick up on that low from September, and a little spike through it, beginning of this week on Monday, but it's held this week. So for me, I think that's an interesting trade. If you were going to take the view, okay, this slide from June is over, and we're sort of building a base ahead of 76, 75, 76. Then for me, being a buyer at 78 and a bit looks interesting. Looks an interesting trade. So that for me would be, and again, this is an interesting market. This is perhaps one of the more interesting markets for next week to see if these lows hold. And if it starts slipping much below 76, then we're almost on new lows for 2022. We're absolutely at a 10-month low for oil if it starts breaking below 76. Let's see what happens. But I would be tempted to be a buyer. Stop loss the other side of that low. That low was 75.24 actually. That was Monday's low. So stop loss maybe the other side of 75, and see if we get another rally up to 92. That would be a good trade. You've got $14 upside and about $4 downside. It's interesting from a risk reward point of view. But yeah, very interested to see if these old lows hold in oil, the lows that have been in place since the 26th of September. So there we go. Let's see what happens. Natural gas. I missed a really good trade on natural gas, and I'm not really kicking myself because there's always another trade. But absolutely, I wasn't paying attention because I was going away. But it was a really good trade. I think I was going to be a buyer in here about a week ago, about 5.8 or 6, something like that. But anyway, I didn't do it. But for me, natural gas in the medium-term picture is still the same. We've seen this big sell-off from 10 down to 5, so the price of natural gas halved, from August into October. It's in about 2 months, but the big trend is up. So absolutely, I would be a buyer on dips in natural gas. Down towards 5. It'd be interesting to see where this correction goes if it ends up being a correction, after, you know, I mean, it is a nuts market. You know, the thing, so from the 24th of October to the 23rd of November, the price of natural gas went up 50%. You know, these are big moves. You know, for anything, 50% move is a big move. For me, I'd be a buyer of a dip in natural gas, you know, but the big trend is still up. So that's why I'd be a buyer of a dip. So I missed the trade, but I think it's an interesting market. We'll take a look at some currencies in a minute. Before we do that, let's have a quick look at UK gilts. Just because of what's been going on in the UK in recent months. You know, we had all that carnage with the new Prime Minister every 3.5 hours, whenever it was a few months ago. You know, definitely UK gilts have stabilised. And just yesterday, the bond market, UK bonds, pushed back to where they were end of August. So I do think we are absolutely seeing some stability for the UK economy, relatively speaking, from the absolute show it was in the summer. And maybe hopefully that'll start feeding through into more sensible interest rates and stuff, or calmer markets. But I thought it's interesting that the lows we saw during the various changes in Prime Minister do look to have been major lows. Let's take a look at some currencies though. I'll start off with sterling yen. So I'm in the sterling yen trade at the moment. And the risk was 100 quid on the trade. And I was up earlier this morning about 140 quid because I'm doing 100 quid risk for the course to use it as an example on the course. But I bought sterling yen yesterday on the hourly chart. It was a short-term trade. So I bought in about here somewhere, 167.50 or something. And really, just because the trend is up, you know, so the trend is up, blah, 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 blah. It hit a new high for the trend on Wednesday, sold off on Thursday, so I bought it. Just buying into the trend, really sensible risk and all of that. So that was the reason for that trade. Sterling yen, if we take a look at the chart, the daily chart is pretty scrappy, to be honest, you know, but overall, the bias, despite the trouble we've seen for the pound over recent months, the bias I would suggest is still up for sterling yen. But let's take a look at pound against the dollar, the more regular market. This is interesting. You know, we've had this downtrend in pound against the dollar now since February of this year. And if we went back, actually, the last time we saw it at a major high, we've got to go back to February of last year. Yeah, so we've seen this market in decline for at least all of this year. But it is interesting, you know, that we've broken out this downtrend. We've broken out over the last couple of weeks, broken out this downtrend that if I just zoom it back a bit, had done a great job on the way down since Feb. But it's always difficult. I find it always difficult when a market breaks the trend. Do you say, well, okay, this is a valid break in the trend line, or actually it's a false break? For me, at the moment, I would treat it as a false break. So it's had a great run. It's gone from 103 to where we are now, 121. So we've seen, it's a 15% plus move since the end of September. But for me, I would take the view, okay, great run sterling, but it's a little bit overdone. So for me, 123 is the line in the sand on the upside for sterling yen. Sterling against the dollar. So for me, again, I wonder, do we see it come under a bit of pressure next week? Let's see. If we get that dollar bounce back, definitely. I think if sterling breaks 123, then that downtrend is absolutely over. But for me, I think this could be quite a good opportunity for me. You might have a different opinion. Do what you want to do. But for me, I think maybe up here, we're going to see a bit of sterling weakness creep back in. So I think it's an interesting market to watch next week. You could absolutely make the argument, of course, if we looked on the hourlies since the 26th of September, that trend is still up. Where's the 26th of September? Down here. So you can, you know, so going short is perhaps a little bit premature, because that recovery trend is still up. But I do wonder, flip it back to a daily. Is it going to start to run out of some steam up here? But that's another interesting market to watch, I think, next week. If we take a look at euro US dollar, again, not much over the last couple of weeks. Well, I suppose we last did the live stream here. The market's a little bit higher. I suppose perhaps the risk is it sells off from here. I would be a buyer of a dip though. If it dipped back towards parity, towards 1 with the dollar, I think that's an interesting trade. So for me, a bit of euro weakness would be an interesting opportunity up here, I think. But I do think, it's taken out some relatively big levels, the euro. We've gone through this old high from September. We've gone through just about, perhaps a little bit briefly, the highs from the summer, from August. So I think, for me, there's a better argument for buying sterling against, what's wrong with my brain today? Euro against the dollar than buying the pound against the dollar. But I'd rather see a dip. But, it is interesting when markets come out of their trends. Are we starting to see something of a major shift going on in the world? Considering these trends have been in place for much of this year. So euro US dollar, another interesting one to watch next week. But I'd rather be a buyer of the dip on euro dollar. Let's take a look at the crazy world of crypto. Bitcoin futures. Have a look at those. Just same. It's just boring, isn't it? We've had all that stuff with FTX, the exchange, going into bankruptcy. Trend in Bitcoin is still down, trading at 16,000 and a bit. For me, zero interest in that. So not a lot to say really on that. I want to see at least some strength, some proper strength from here. Not $1,000 or $2,000 move from here. So for me, no interest in crypto. The recent lows have held. What's the recent low? About 15k. So if 15,000 broke, the risk is maybe 12,000 next. But it's just been a pretty boring couple of weeks. I suppose you could make the argument with all the stuff going on with FTX, the exchange that went bang. It hasn't fallen much over the last week, or hasn't fallen over the last week. So maybe a lot of the bad news has been discounted in. But I just think that's done a lot of damage to the landscape of the crypto world. So I think that we need time for dust to settle and see if sentiment starts to turn around. So for me, no interest in that one. We'll have a quick look at Ethereum, see if that's any different. No is the quick answer there. I suppose again you could make the argument. Let's say you absolutely really wanted to buy Ethereum for some reason. If I was a buyer now, I'd put a stop under 1,000. We had the $1,000 lows for Ethereum in the summer. We've come back. It's held above 1,000, so it is being, I suppose, something of a psychological level for Ethereum. So yeah, maybe, but no, because I just think it's just going to just chop around, and there feels like so much excitement has been so much. Let's say the dumb money has been sucked out of that market. I can't see anything too much exciting happening with that, but we'll keep an eye on it every week. So interesting stuff to watch. So for me, arguably oil is one of the most interesting market to watch next week, because we're down on these lows, 76, 75, 76 lows. I think reasonable chance of a bounce from here. Nice risk reward trade. So that's an interesting market to watch. Stock markets, I wonder, will we see some of these US stock markets under pressure next week after a good run over the last 6 weeks or so? Those trends are still down. And the US dollar, again, another one I would favour for perhaps a bit of a dead cat bounce from where we are now. So what we'll do, we'll take a look at your questions. As usual, quick plug for the course. Go to the website, jonesandmarkets.com. Link is in the bottom of the description of this video. dj@davidjonestrading.com if you have any questions. I genuinely think it is the best trading course out there, because it is just the reality of trading, and trading with real money, not a bunch of theoretical nonsense where I read a textbook. So have a look at it and join it. Right, let's jump into the markets, or the questions, sorry. First question, Litecoin. Litecoin is performing well compared to other crypto. What are your thoughts? I've got no idea. Let's have a look, shall we? Litecoin in US dollars. I would sell short. That's what I would do. I mean, you're right. It has absolutely outperformed. It's gone from 48 on the 9th of November to 76 today. I would treat it as something of just a bit of an aberration move and sell short up here with a stop above 84. So the risk reward is good. Risking, I don't know, $10, $12, $15 And if it pulls back into the range, there's maybe $16 upside. So yeah, maybe. But for me, yeah. I mean, you could treat it as a breakout, couldn't you? If we were looking at this like classic chart analysis, you'd say that was a breakout because we've broken above. As you say, it has performed very well compared to the other crazy world of crypto. You know, it's at a 6-month high. I would be tempted to treat it as a false breakout and sell short personally, but then have a stop above that high. That's what I would do. So I treat it as a bit of an aberration. But like I say, I can't even remember the last time I traded a cryptocurrency. It was probably Bitcoin back in March of this year. It is not an area of the market that I have much interest in because the volatility is nuts, as we know, and I just don't like crypto. So there you go. But let's see. Let's come back to it next week and see where it is. It'll either be at like 120 or 20, won't it? Can we have a look at ABEV? ABEV. Ambev. Is it a drinks company or am I getting confused? Is it a beverages company? To me, that looks boring, I would say. Boring. So for me, I'd be a buyer of a dip or a seller of strength. But it's one of these things where if we look, so we're looking at the last 12 months here, aren't we? And it's in the middle of the range, isn't it? So the lows are in at 245, the highs are in at 325, it's trading at 3. So for me, it's in the middle of the range, assuming it's the right stock, the right one I've got there. Yeah, I think it is. It's just a boring one. Yeah, nothing. So if we looked at it a week's time, I'd expect it to be about $3 in a week's time as well. So yeah. So nothing too exciting for me. And if it got knocked down, it'd be a buyer of a dip, but it's just rangy, isn't it? So in a rangy market, you want to be a seller. You want to be trading at the extremes, not trading in the middle where it is now. So that's not an exciting one for me. Newcrest Mining Company, gold and copper producer in Australia. Okay, Newcrest Mining. Here we go. Okay, so what we just say, so it was trading, it has traded as high, so we're going back a bit, we're going back 3 years, traded as high as $38, and today it's Aussie dollars, and today it's 20 Aussie dollars. So if you were going to be pedantic, or if I was going to be pedantic, you could make the argument, I suppose, well, the big trend is still down. The big trend from whenever, July 2020, is still down. So you could absolutely make that argument. We've got lower highs, lower lows, lower lows. And that's it. But if you wanted to be perhaps a bit more aggressive, you could also make the argument, well, the thing sold off quite heavily from April into whenever it was, September. Are we seeing it turn around? Okay, so that would be another way of looking at it. Are we seeing this trend break? So, and we're sort of trying to break out. Do you know what? The trade I would do here is I would be tempted at the moment to think, right, the risk is, okay, we've had a good run from 16 to 20. Is it going to run out of steam? So I think that was the risk. But I wonder, I think for me, I would try and buy into momentum. If it broke above that high from 2 weeks ago, that high was $20.20, perhaps then it really gets a move on. So I think it's interesting if it manages to break out again. So we've had the breakout. I'd be tempted to think at the moment it's a false breakout, but next week if it starts motoring a bit higher, I could be tempted to be a buyer with a stop probably around 18. So it's definitely an interesting market, because it has turned this trend around a little bit over the last couple of months or so. So it's an interesting one to have a look at. Also, can we have a look at the Aussie dollar? Yeah, let's have a look at that, because we haven't looked at that. I haven't looked at that for a long time either. Aussie dollar, US dollar. Let's have a look. What would you say? What would you say here? So if we go back to April of this year, so clearly, a lot of things against the US dollar, because the US dollar has been so strong. A lot of things have suffered. So looking at that in isolation, it looks like the perfect place to go short the Australian dollar. And actually, it's not a bad short up here. Again, it ties up with, are we going to see a bounce back in the US dollar, right? So the trade I would do here the trend has been down. The Aussie has had a good run since October because, of course, we've seen US dollar weakness. It's had a little blip through the downtrend, but is it a false blip? So for me, the trade I would do would be to go short the Australian dollar with a stop above that high, 68 high. So I think that's another interesting market to watch next week. But for me, absolutely, I would go short here. But go short with a stop loss, obviously, because risk control is really important, and most people are really poor at risk control, which is why 70% plus of traders lose money. But interesting. But for me, 68 is the line in the sand for the Aussie. If it starts to break through that, it starts to look like we've got a proper reversal of this trend that's been in place since April of this year. What do you think about the Fed not raising interest rates? I heard the Fed may have 0.5 only. Any opinion? No, I got no opinion on that, to be honest. For me, what's more important to me is how the market reacts. How does the market react to what the Fed's doing and what the Fed's saying? No, so I don't have an opinion. I just trade. For me, I just trade what the market does. And I do wonder, with the weakness we're seeing in the dollar, are we seeing perhaps a calmer approach to the markets, by the markets, to what the Fed is doing? But I don't have a view about 0.25 either way. It's not really my thing. We did silver and gold and the pound against the dollar. Coming out, you got stopped in Adidas. Adidas. Where is it? It's not listed in Milan, is it? It's listed in Germany. Is it not listed in Germany? Hang on, I've got a low stock. Is that one surely? Adidas AG. Because I remember looking at that. That spiked, didn't it, on the new boss who came in, wasn't it? There was a new chief exec who came in, and I probably said, I'd go short because it might be just a false spike, and the thing has pushed higher before rolling over. The big trend is still down. So for me, it's one of those trades that, you get stopped out of, unfortunately. But the big trend is still down in Adidas, and I would wonder, are we going to see a retest of €100 in Adidas? So for me, it's not one I've ever traded, but the trend has been down for more than a year now. So for me, if I was going short now, I'd put a stop above 140. It'd be interesting to see what happens if it does get back to €100. Do we see some buying come back in there? But they're always difficult to trade, some of these crazy ones, when they move quickly like that. But it hasn't changed the big trend. But I would have got stopped if I'd have gone short. What's your target on gold? I don't have one. I don't have targets. So in my trading, I absolutely do not have targets. So I'm short gold at the moment. If I had to come up with a target, a short-term target would be the low from Wednesday, about 17.25. A bigger target could be perhaps 16.75 on the short, on the downside, to be a buyer. So I think in the short term, perhaps it's going to drift off. Let's see, but I don't do targets, to be honest. I just run the trade and manage the trade when I'm in the trade. When do you think the US will declare recession? Absolutely no idea. I mean, the GDP number is next week, isn't it? So maybe, but I mean, they said, didn't they? They have had 2 quarters of negative growth. So they are technically in a recession, even though I remember from a few months ago them saying, well, actually, it's not a recession. Technically, it is a recession. It's just a label, isn't it? I don't think, from a trading point of view, I don't think it matters. FTSE is near a high again, but what about the Santa rally? I think it's a good point. I must admit, I haven't looked at the stats for the Santa rally for a while, but historically, markets do rally from, I can't remember what the criteria is, do rally from about the beginning of December into the 20th or the 23rd, something like that. And there are absolute stats out there. Hang on, let's see. Okay, I'm just looking now. So I've got a stat from 1950 through to 1971. The S&P gained an average of 1.5%. And gains 75% at the time. And I'm reading this off the Motley Fool website. I've just Googled it. So 75% of the time, it does gain. in that period of time. So absolutely, there's always scope for some. Personally, I wouldn't trade it, a Santa rally, but it does help to know that, statistically, the first few weeks of December, we do see markets tend to drift higher. I wouldn't do a trade on that basis, but that is a fact, historical fact. But I can't add much more than that. Wheat. Let's have a look at wheat. Let's have a look at that. I think I'm still in that trade, wheat, longer term trade on wheat, and I think it got knocked back this week. Yeah. So I'm in the trade. I've been in the trade for a while, since August, I think, because of the longer term uptrend going back to August 2020. So we're 2 years into this uptrend. I'm happy to stay long. I've given back a bit of profit. It didn't move enough for me to think about moving my stop loss. I still think that trend is still up. As long as 720 holds on wheat, I'm quite happy to stick with the trade. I reckon that's $7.20 a bushel or something, isn't it? Whatever it is. So for me, I'm quite happy to stick with that. If I didn't have a trade on, I'd still happily be a buyer now on wheat, looking to see if it can get a move on and go back to at least where it was in October. Let's see what happens. But it has, absolutely been in reverse for the last couple of months or so. But we're back to levels that have proved all this year, or near levels that have proved quite pivotal for wheat all this year. So let's see what happens. Dollar Swiss. Yeah, let's have a look at that. I'm guessing some weakness. Well, they got really hit, didn't it? I got absolutely clobbered. I'd be a buyer though. Again, it ties up to this my view that perhaps the dollar sell-off has been overdone. I think the easier money in the dollar is perhaps behind us. But again, dollar Swiss went from 101.50 back to 94. It's a big move-ish. And 93.70 was a big level from August. So we're back. We got not back to 3-month low. I'd be a buyer, and I put a stop again. I put a stop under 93.50, whatever that low is. 93.56 is the low. So again, it's an interesting week next week for the dollar, particularly with US GDP data out on Wednesday and non-farm payrolls out on Friday. But for me, I would be, for my own trading, leaning towards being a buyer of the dollar, and the same with dollar Swiss. But interesting market. Buy Tesla and Snowflake. What's Snowflake? We'll have a look at Tesla first. Tesla Inc. Oh dear, it's just. I remember we looked at this last time round, didn't we? I was looking at this level, whatever that level was, 177, and it's just broken lower again. I mean, that looks pretty weak to me still, Tesla. I mean, it's only Tuesday of this week that Tesla hit its lowest levels in 2 years. 2-year low in Tesla. So for me, that trend is still down. I would not be a buyer of Tesla at the moment. I want to wait and see if the thing can turn around. So I think the whole EV things have been perhaps hit a bit this week, because I remember we looked at a load of them last time, didn't we? We looked at Xpeng, the Chinese one, and NIO, the other Chinese one. But for me, the pressure is still on Tesla. So I'm surprised at that 2-year low, but there you go. And Snowflake, what's Snowflake? Hang on a second. Snowflake Inc. All right, I'm intrigued now as to what they actually do. Let me just Google them. Snowflake company, data, cloud, and all of that stuff. Okay. I think it's a better argument for buying Snowflake than it is for buying Tesla. Arguably, it's still a high risk trade, I'd say. But what I would say is, again, you could make the argument: is that downtrend over, where they went from $400 down to about 120? So for me, I think it's an interesting one. If I was a buyer now, I would absolutely want my stop loss the other side of 110. Wide stop loss, but it's a volatile stock, so the market's trading at 143. So if you really wanted to be a buyer, I'd have like a $30 stop on that, which is a 20% plus stop. But the thing does move around. Perhaps if you want to be patient, you want to see, does it get knocked back to maybe the mid 120s again? But it's interesting to see if 110 ends up being something of a floor for Snowflake. Let's see what happens. Any thoughts on buying Disney long term? Because they brought back the old chief exec, haven't they, this week? I saw that. So I'm guessing, well, I'm going to guess what's happened here. I'm guessing it's had a bit of a sharp move up on that news. But what's the trend? Okay, I don't even know when it happened, so I can't really... I mean, that has been mullered, hasn't it? I suppose that... My mouse has just died. I suppose that if you were going to take the view, the new chief exec coming in is going to transform Disney's fortunes. It's an interesting trade. So it's an interesting event-based trade, I suppose you could call it, couldn't you? You could say, you know, the low we've seen is the low now, and the new chief exec is going to sort things out. So that low from the 9th of November is at $86. So it's interesting to be a buyer now at 99 or thereabouts with a stop the other side of that low. I'm guessing that was the announcement, wasn't it? So it gapped higher. So it closed last Friday at 91.80, then opened at 100. So I'm guessing that was the announcement. Gaps higher on the announcement. So yeah, interesting trade. Personally, I'd probably still want to be a bit patient, but if I had to do a trade on Disney, that would be the trade I would do. Buyer now with a stop underneath that low, because if that low goes, you know, we're back to where we were in the beginning of the coronavirus. So, but I can't see him racing away anytime soon. You know, you could argue the trend is still down all over the shop. But maybe this is the thing that makes the difference for Disney. The old boss coming back. How important is having a leveraged account to a trading strategy rather than a straight cash account? Okay, good question. For me, everything I trade is leveraged. Okay, so if I go back to the trades I have open at the moment, right? So I don't know how clear it is. Hopefully you can see this, but basically I've got sterling yen trade that's 20,500, and I've got a gold trade that's 12.5 grand. So I've got 32 grand of exposure at the moment, and to have that exposure, I only need 1,300 quid in margin. So for me, everything I do is leverage. But if you're trading with leverage, you've got to manage the risk. Yeah. So if you, not you personally, but if you're going to be an idiot trader, leverage is just going to make things worse, right? That's why. But of course, if you're trading contracts for difference or spread bets or whatever, you're always using leverage. So I think leverage is an absolutely fantastic tool, because if I'm buying sterling yen and buying 20,500 of sterling yen, I'm not going to sit there and see it halve. You know, my risk on the trade is 100 quid. So if my risk on the trade is 100 quid, why do I want to tie up 20.5 grand? You know, my margin requirement is 680 quid. So it's still more than my risk. So for me, leverage when trading is a really fantastic tool. But it is also one of the reasons that people lose money trading, because they don't understand how to manage their risk, and they use leverage as an excuse to overextend themselves. So in a trading, so to go back to your question, how important is it to a trading strategy? For me, it's really important in terms of percentages. So this account, if we use this account as an example, so I said there's about 800 quid of profit open and closed in November for this account. You can see the numbers there. The account is a 4 grand account, so it's made 20%. Yeah. Now, if I'd had to put up 40 grand, then my return, because I was trading not using leverage, then my return for the month would be 2%. £800 on the £40,000 account. That's right, isn't it? Yes, that is. So for me, it's all about opportunity use of your cash, if that makes sense. So leverage for me, absolutely everything I trade is leveraged, not in my pension, obviously, that's normal investing. But for trading, it's all leverage. But again, you have to understand or appreciate risk management and do risk management properly. So I think leverage is a fantastic tool. Unfortunately, most people who trade when it comes to trading are idiots who don't manage risk properly, and leverage causes them losses quicker. But used sensibly, I think it's, for me, an invaluable tool for trading. So I hope that helps the answer. But clearly, if you're trading not using leverage, you can still make the same. You can still make the same amount of money. You just need more money to make that money because you're not leveraging yourself up. If you're doing a 20 grand trade on sterling yen, rather than having, like I did, the 680 quid margin requirement, you need 20 grand in your account. So that's the difference. But with leverage, you need to manage the risk properly. So I hope that helps. But if you go on my course, we explain all of it and how to manage leverage properly. It'll be the best money you've ever spent, probably. How about cotton? Yeah, let's have a look at cotton. I haven't traded cotton for a while, but it had been a good. No, we looked at that before. There's my squiggle trade we did last time, so we must have looked at it there, and I would have said, I think, I'd buy a dip, and I drew the squiggle, and we've had the dip, so I should have bought. I would have bought. I'd buy it yesterday if we're going to take the view. And it's a bit of an aggressive trade, maybe, but if you're going to take the view, this correction is over. I would be a buyer now at 85.66, and I put a stop loss underneath 72, the low from the end of October. So that is what I would do. Should try and get rid of the squiggle. So yeah, that would be the trade I would do. And if it breaks 72, 75, whatever the low is, I would absolutely be out of that. I mean, I suppose you could still say, because there are always two sides to every trade. You know, there's always a reason to be a buyer or a seller. Otherwise, markets wouldn't exist, would they? You could make the argument, absolutely, that trend is still down. So perhaps, let's not get too carried away with the fortunes of cotton. The trend for the last 6 months is still down, and it is. So this sharper trend has dropped. So for me, probably the disciplined approach would be to do nothing. But if I had to buy it, I'd buy it now, and I put a stop underneath the low from October. But again, great market from way back here in July 2020 all the way into May 2022. Really good trend, and a lot trickier over the last 6 months or so. I mean, it's back to where it was in July 2021. But interesting market. Let's keep coming back to it and see. Intel. Let's have a look at Intel. From memory, were they getting hit really hard? I've not looked at them for a while. Yeah, okay. So they were. So Intel has gone from $67 in April 2021 to 26, below 26 most recently, breaking out the trend line. I would be tempted to treat this as a false break and sell short. That's what I'd be tempted to do. So go short at 29.50 with the stop above 32. I think if it can break 32, it does start to make the argument more that perhaps the worst is behind it. But I'd be tempted. It's had such a dire year and a half, Intel. I don't think it's going to do a handbrake turn. I'd be tempted to sell short. Perhaps it goes for another trip down to $25. So it's an interesting one because we've got this break of the trend line. First time we've seen that trend line broken since it's been there since March. But I'd be tempted to go short with a stop above 32 for now. And you said Nike as well, didn't you? Let's have a look at Nike. Nike Inc. There's a lot of stuff that is sort of breaking trends, isn't there, at the moment? But again, with Nike, a bit like Intel, it's had a good run. I'd be tempted to go short again. Nike, go short with a stop again. Okay, it's broken out, but it's been going down, Nike, for a year now. So just because it's spent 2 weeks above the trend line, do I really believe it? I'd be tempted to say not yet. So I would be tempted to go short Nike with a stop above 120 or thereabouts. But let's keep coming back to these stocks, that are breaking out like this to see if they are turning the corner. But I'd be tempted to treat it as a bit of a false break. VIX. We looked at the VIX last time, didn't we? And I said with the VIX, I've got no interest in trading the VIX. And someone else saying the VIX could be a buy. It could be a buy I wouldn't personally. I don't think I've never traded the VIX, but we are back to historical lows. For the last 9 months or so on the VIX, sort of 18 to 20. And if US stock markets did start to roll over next week, as I think they might do, then the VIX would start ticking up, perhaps, as people got a little bit worried about a deeper sell-off. So yeah, I wouldn't trade it, but I can completely see why some people are saying maybe it's a buying opportunity for the VIX. But good luck. Let me know how you get on. But yeah, 18 to 20 has been a floor. Is US dollar SEC a buy at these levels. US dollar SEK. Let's have a look. Is that the Swedish? I never know if it's the krone or the krona. Krona. Swedish krona. Let's have a look at those. Dollar SEK. Oh, I can see what you're thinking. It's a good trend, isn't it? Let's have a look at the trend. Where is it? Where is the thing? I would be inclined to say yes. Oh, look at that. It's almost textbook. So for me, I'd be a buyer. So I'd buy it at, where is it now? 10.43. Absolute closest I would want my stop is under that recent low, which is only from last week, last Tuesday. 10.30, isn't it? Is that low? Interesting though. That's a good trend, that, isn't it? Good spot that one. So yeah, really interesting market to watch. And again, it does tie into maybe there's going to be a dollar bounce coming. Let's see what happens. But still, that is $1 trend that's still going. Dollar against the Swedish what's it is still going. So yeah, let's come back to it. Let's come back to it next week and see what it looks like. And that's it. No more questions. If there's no more questions, we're done. So like I say, I'm going to do this. I'm going to try doing this live stream. Well, I'm going to do this live stream on Wednesday of next week. So just if you're not subscribed with the notification thing switched on, if you do that, you'll get the thing. So I'm going to do it at 12:30, I think, on Wednesday, assuming I remember, of next week. Try it. So try doing 2 live streams a week for a few weeks and see if there's any interest. To find out more about the course, go to the website, jonesthemarkets.com. Any questions about anything, drop me an email. Any general trading questions, I don't have all the answers, but I can give you my opinion on stuff. And my email is dj@davidjonestrading.com. But we'll wrap things up there. Thanks for coming along. See you on Wednesday if you're free. Otherwise, we'll do this again next Friday at 2:30 after the payrolls and see how markets are doing then. Okay, enjoy the rest of your weekend.